Hello financial fans, welcome back to another stock analysis. Today we'll be covering Waste Management Inc. stock ticker WM. Waste Management is a company that provides waste collection, transfer, disposal and recycling services. They operate in many locations throughout North America and offer a variety of services such as curbside pickup of trash and recycling, commercial and industrial waste management, and hazardous waste disposal. They also own and operate landfills, recycling facilities, and transfer stations. Their goal is to help manage and dispose of waste and in an environmentally responsible manner and to promote recycling and conservation efforts. Currently, their market cap is sitting at $63.4 billion, and in 2021, they generated a revenue of $17.9 billion. The dividend yield is currently 1.68%. 22% of their revenue is generated from commercial, 15% from industrial, 14% residential, and 20% from landfills, 10% from transfers, 6% from recycling, and the remaining 30% in other various. To determine the final valuation of the company, we'll be using a margin of safety. This margin of safety will be based on financial ratios, the financial health, and the growth of the company. We'll be using a standard margin of safety of 25%, which can either increase or decrease by the ratios that we're going to look at in just a moment. The severity that the amount of margin of safety will increase by will be determined by using a scale. When we're using four colors in a scale, bright red will mean 5% increase, orange will mean no change, light green will mean a 5% deduction, and bright green will mean a 10% deduction. When we're using three colors in a scale, bright red will mean a 5% increase, orange will once again mean no change, and bright green will mean a 5% deduction from our margin of safety. The first two ratios that we'll be looking at are the EBIT growth and the margin growth. The EBIT has increased going from 2 billion in 2012 to almost 3 billion in 2021. The average growth in EBIT during this period was 4.9%, meaning no change in the margin of safety. The margin has also increased, going from 14.66% in 2012 to 16.5% in 2021. The average growth in margin here was 1.5%, meaning 5% deduction from our margin of safety. The next two ratios that we're going to look at are the dividend growth and the payout ratio. The dividends have gone from $1.50 a share annually in 2013 to $2.60 a share annually in 2021. The average growth in dividend was a very nice 7.17%, meaning a 5% deduction from our margin of safety. The payout ratio is sitting at a very solid 47%, meaning no change in the margin of safety. The final two ratios that we're going to look at are the debt to EBITDA and the return on invested capital. To get our debt to EBITDA ratio, we have to take the debt, subtract the cash from it, and then divide it by the EBITDA. Out of this, we get the amount of years of EBITDA it takes for the companies to pay off all of their debts. For Waste Management, it's just over 2.5 years, meaning a 268% debt to EBITDA ratio, which is no change to our margin of safety. The return on invested capital is sitting at 9.47%, meaning once again, no change in the margin of safety. Let's go look at the valuation models next to determine the intrinsic value of Waste Management. The first valuation model that we'll be using is the discounted cash flow model. I've imported the free cash flow going from 2012 to 2021. Over this period, they saw very nice increases year over year on their free cash flow, and the average growth during this period was just under 15%. Since they have shown solid increases in their free cash flow, I've gone with a very high 80% of the average growth, which is almost 12%. Using this percentage, we can determine the future free cash flow for Waste Management and determine the terminal year of valuation, using a perpetual growth rate of 3% and a discount rate of 8.5%. With this, the sum of free cash flow is $81.5 billion. What we have to do to get our equity value is add the cash and equivalents and subtract the debt. Doing this, we get an equity value of $68.17 billion. And all that's left to do to get a discounted cash flow price per share is divided by the amount of shares outstanding, which for Waste Management is 410 million shares. Out of this model, we get a price per share of $166.08, and with the current price of $154.37, we get an upside of $11.71, which is over a 7.5% upside. Second model that we'll be using is the dividend discount model. I've imported the dividend payouts going from 4 years ago to the current year. During this period, the average growth in dividends was 8.78%. Since we're calculating the lifetime expected growth in dividends, I've gone with 75% of the growth rate. This is 6.58%. I've gone with such a high ratio because I think they'll keep increasing their dividends at this pace because they're on the way to becoming a dividend aristocrat, since they're 18 years out of 25 years to becoming a dividend aristocrat. Dividend model price per share out of this model is then $144.49, and with the current price of $154.37, the upside here is a downside of $9.88, which is a 6.4% downside. The final model that we'll be using is the multiple valuation. In this model, we'll be looking at similar companies to Waste Management, looking at their stock price and the earnings per share. This way, we can determine the average PE multiple in the industry, which in this case is 29.1. All that's left to do to get our fair value here is multiply it by the earnings per share that Waste Management is generating, which is $5.38 a share. Fair value here then is $156.57, and with the current price of once again $154.37, we get an upside here of $2.20, which is a 1.4% upside. Let's go look at the final overview of our valuation models next. Looking at our final overview, we have imported the discounted cash flow, the discounted dividend, the multiple valuation, and out of this we got an average of $155.71 a share. Without a margin of safety, the current upside will be just under 1%, but we have determined our margin of safety earlier, taking a standard margin of safety of 25%, deducting 5% for the margin growth, and deducting another 5% for the dividend growth, leaving us with a margin of safety of 15%. Doing the math, we get a fair value then of $132.36. With the current price of $154.37, here we get a downside actually of minus 14.26%. So in this case, it will be a sell if you were to include a margin of safety. If there's any other companies that you would like to see on this channel, please let me know in the comments. And thanks for watching.